AiRWA Inc. is currently trading at exactly 1.05 USD, having slipped 0.030 USD, or 2.80% in today's intraday session. If you are looking at the chart right now, you are seeing what appears to be a lifeless penny stock drifting into oblivion. The volume is thin, the candles are small, and the general sentiment is one of absolute indifference. That is the expectation. That is what the market wants you to see, a failed sports technology company that has lost its way. The reality, however, is that you are looking at arguably the most mispriced asset on the NASDAQ today. You are looking at a mathematical anomaly where the market capitalization of the company is currently lower than the liquid crypto assets they reportedly hold on their balance sheet. Let that sink in. We are talking about a company with a market cap of roughly $22 million that recently announced the receipt of $30 million in Solana tokens. If you can do basic subtraction, you realize that the market is effectively valuing the operating business, the patents, and the future cash flows at negative $8 million. This is the kind of disconnect that value investors dream about, but it is hidden inside a wrapper that scares most people away. The drop to 1.05 USD today isn't a sell signal. It is a glaring inefficiency in a market that hasn't figured out how to price a company that is simultaneously a matchmaking AI firm, a former sports gadget seller, and now a massive player in the real-world asset tokenization space. To understand why AiRWA Inc. is trading at this level, you have to understand its chaotic history. Most investors still know this ticker as Connexa Sports Technologies. They remember it for the Slinger Bag, a tennis ball launcher that had a moment of glory before inventory issues and marketing costs crushed the stock. The expectation is that this is still that company, a hardware business struggling to survive. But that company is gone. The Slinger Bag business has been divested. The ticker symbol YYAI now represents a completely different entity, a chimera of high-tech ambitions that pivots so fast it gives traditional analysts whiplash. The current slide of 2.80% is largely due to the confusion discount. When a company shifts from selling tennis gear to licensing AI for dating apps, and then pivots again to building a crypto exchange on the Solana blockchain, the market assumes it is a scam or a desperate flail for relevance. This is a natural reaction. But if you dig into the filings, specifically the details of the joint venture with JuCoin, the picture changes. This isn't a press release pump, this is a $500 million capital commitment. JuCoin, a major Asian crypto exchange, has partnered with AiRWA Inc. to build a bridge between traditional finance and the blockchain. They aren't just building another Coinbase, they're building a platform to tokenize U.S. equities, stocks like Apple stock or Nvidia stock, so they can be traded 24/7 on the blockchain. The terms Schwab Intelligent Portfolios crowd isn't buying this stock because it doesn't fit their models. It's too small, too weird. But that is exactly why the opportunity exists. The $30 million injection in Solana tokens is the anchor. In a world where terms Bitcoin and terms Ethereum dominate the headlines, Solana has emerged as the chain of choice for high-frequency, low-cost transactions, exactly what you need for a stock exchange. By holding this much Solana, AiRWA Inc. has effectively turned its balance sheet into a crypto proxy. If Solana runs, AiRWA Inc.'s book value expands explicitly. Yet the stock at 1.05 USD is trading as if this asset doesn't exist. Let's talk about the expectation versus reality of the business model. The expectation is that RWA is a buzzword. The reality is that it is the holy grail of the financial industry. Think about the inefficiencies of the current stock market. It closes at 4 p.m., settlement takes 2 days, T+1 or T+2. It's clunky. Tokenization solves this. It allows for instant settlement and 24/7 trading. AiRWA Inc. isn't just building a casino, they're building the infrastructure for the next generation of finance. The recent test runs for settling tokenized U.S. equities were successful. This is a technical milestone that proves the concept works. They aren't selling a dream, they are engineering a reality where you can trade fractional shares of the S&P 500 at 3 a.m. on a Saturday morning using your crypto wallet. Today's price action also reflects a lack of liquidity. When a stock trades this thinly, a single retail sell order can drop the price by 2 or 3%. We are seeing this air pocket effect today. There is no massive institutional selling, there is just a lack of buyers because the story hasn't propagated yet. The average investor using a Fidelity mobile app or checking their Robinhood stock trading dashboard sees a penny stock with a weird name and scrolls past. They don't see the 146% revenue growth reported in the recent financials, driven by the other side of the business, the YYAI acquisition. This brings us to the weird middle chapter, the AI matchmaking business. It sounds absurd, a tennis company buying a dating AI, but look at the margins. The matchmaking technology, which uses metaverse patents and AI algorithms to connect people, is a high-margin licensing game. It generates cash flow without the heavy inventory drag of the old sports business. This cash flow is what keeps the lights on while they build the crypto exchange. It is the fuel for the rocket. The market hates it because it is unconventional, but from a cash flow perspective, it is brilliant. It diversifies the revenue stream and reduces the burn rate risk that plagues most pure-play crypto startups. The technical analysis at 1.05 USD is fascinating. We are sitting right on top of the psychological 1.00 USD support level. This is the do or die line. If it breaks 1.00 USD significantly, the NASDAQ compliance algorithms start flashing red again, risking another delisting notice. But the company just did a reverse split to fix this, so they are safe for now. The consolidation here suggests an accumulation box. Smart money, likely smaller family offices or crypto-native funds, is slowly picking up shares without spiking the price. They are absorbing the supply from frustrated legacy shareholders who are finally exiting their underwater positions. One of the most critical aspects of this trade is the terms interactive brokers angle. Sophisticated traders know that accessing global liquidity is key. AiRWA Inc.'s partner, JuCoin, brings a reported 4 million users from the Asian market. These are users who want exposure to U.S. stocks, but often face barriers to entry. By offering tokenized U.S. equities, AiRWA Inc. opens the floodgates for this capital. It is a geopolitical arbitrage play. You are selling access to the U.S. market to a global audience that is hungry for dollar-denominated assets. This is not just a tech play. It is a macroeconomic play on the dominance of the U.S. financial system. I want you to pause and think about the risks because we have to be balanced. The execution risk is massive. Building a compliant exchange that satisfies the SEC and international regulators is a minefield. The terms Robinhood crypto division has faced scrutiny, and they are a giant. AiRWA Inc. is a minnow. If the regulators decide that tokenized stocks are unregistered securities that cannot be traded this way, the whole business model could hit a brick wall. This is the binary risk. You are betting that the regulatory landscape will soften, or that AiRWA Inc. operates in jurisdictions that are more crypto-friendly. Comment below with your thoughts on this. Do you think the SEC will eventually approve tokenized stocks for 24/7 trading, or will they fight it to protect the traditional exchanges? And how many shares of YYAI are you holding, if any? I'm curious to see if the sentiment here is fear or greed. Now, let's look at the JuCoin partnership again. The deal structure involves a $500 million investment split between the two. AiRWA Inc.'s contribution is partly its public listing status and governance structure. JuCoin brings the tech and the crypto-native user base. This reverse merger-style partnership is a classic way for offshore crypto money to find a home in the U.S. capital markets. It validates AiRWA Inc. in a way that a standalone roadmap never could. The fact that they have already received the first tranche of $30 million in Solana tokens proves that JuCoin is serious. This isn't a letter of intent, this is wires hitting the bank or tokens hitting the wallet. The volatility we're seeing today, that 2.80% drop, is also a function of the crypto market's own volatility. Since AiRWA Inc. holds Solana, its book value fluctuates with the price of Solana. If Solana drops 5%, AiRWA Inc.'s intrinsic value drops. Investors who are savvy enough to realize this are likely arbitraging the stock against the token.